This is Tim Phillips, Chief Executive at Phillips and Company Advisors. And as part of our kind of ongoing series of interesting people to talk to, I want to introduce you to Andrew Polk, who is a co-founder and head of economic research at Trivium Group, which is a Chinese-based strategic advisory firm. Full disclosure to whoever's listening to this and watching this is that we do at Phillips and Company have a China A SMA product that invests in China A stocks and some Hong Kong companies, but we have used Trivium. We're a subscriber, and I would say if you have a really deep interest in going that deep into China, Trivium probably offers the best pound for pound, dollar for dollar value to get insight. Andrew's headed that up. He did some prior to that. He did some strategic work for Medley Global Advisors, which does advise folks like us, hedge funds and asset managers. He got his master's in economics, international studies from Johns Hopkins, so he's well credentialed, and he's done some work for the U.S. Department of Treasury. So Andrew, hey, really thanks for doing this interview with us. This is an exciting time, nervous time to talk to you, and we hope you can shed some light. And I would say, view this audience as kind of beginners to intermediate understanding of how China works. And would you weave in some historical context? So we're excited to have you. Is there anything I left out in your bio, Andrew, that you want to talk to?
No, I really appreciate the kind introduction, Tim. Thanks for having me. The only thing I guess I'd add is I did spend 10 years in Beijing, so have some on the ground experience. Due to the pandemic, I've ended up having to leave China and am now located in Washington, D.C. So we also keep a close eye on U.S. policy towards China, which is particularly poignant given some of the issues we'll talk about today. So I really appreciate it. Excited to be here.
Well, we appreciate your time. Hey, let's unpack the Ukraine issue as it relates to China and Russia. Obviously, to the external eye or the glancing eye, it would seem like, hey, why doesn't China just jump on board and get on the bandwagon with U.S. and Europe? I mean, Europe particularly is a huge trading partner for China. Why don't they just jump on board? It would be a lot easier from our eyes to do that. Tell us why they don't and what their approach really is.
Yeah, so I think their approach that they've laid out and are going to try to stick to is kind of this idea of trying to push the idea that they're neutral, that they basically don't have a dog in this fight, while rhetorically supporting kind of the Russian talking points in terms of why all this took place. Now, there are a lot of folks who say that's an untenable position. At some point, China is going to have to choose a side, either double down and support the Russians more aggressively, or, as you say, throw its lot in with the West, condemn the invasion, start to implement its own sanctions and further isolate Vladimir Putin. I think the big fundamental reason that China is not choosing the latter option is that they still see the United States, and in particular in the West generally, as a big long-term strategic competitor. And so sort of cozying up to the West at the expense of their sort of strategic ally in Russia is pretty much a non-starter at this point. So they're really not comfortable with that in terms of their long view on what geopolitical competition is going to look like. That said, you nailed it in that they also, when it comes to pure economics, are, if you put the question to them, would you rather have the Russia market or the rest of the world market? They absolutely want the rest of the world market. So while they are rhetorically supporting Russia, they are being very careful, not to militarily support Russia, because they know that would bring the sanctions, target on their backs, and to be largely compliant, and in fact, very consistently compliant with the US-led sanctions regime on Russia, so that they don't get caught up in the economic piece of this. So it's an uncomfortable position. I think that's been well acknowledged. But if you look at their options to either throw in with the West, which they think hurts their long-term geopolitical objectives, throw in with Russia more aggressively, which hurts their short-term economic objectives, or just stay in this middle ground and kind of, try to play neutral. I think, that's why they're choosing that middle ground. And while a lot of people are uncomfortable with it, Western politicians and the Russians, I'm sure, China is going to try to stay in that position for as long as is possible, I think.
And so, from your standpoint, Andrew, although they're both authoritarian kind of regimes, so to speak, that's not really the driving factor for China. It sounds like theirs is mostly economic. And tell us how, I mean, China is completely energy dependent. I mean, they don't have energy independence. And so I think if the stats are right, their largest import of energy comes from Russia first, Saudi Arabia second. Is that playing to their equation or their geopolitical equation?
So it certainly matters, and you're right. That these are two authoritarian regimes. I think we can go ahead, and China's a little bit more of a complicated case. I think we can definitely call Russia that. China's a little bit more complicated, but they are two very different systems, very different beasts. And I think what people don't understand when they think about China is the Chinese senior leaders are very, cold, clear-eyed, and kind of cold-hearted, or whatever you want to say, about cold-blooded is the word I'm looking for, about really thinking through what their objective is and making the decision that's going to best allow them to achieve their objectives. So they're not going to buddy up with Russia simply out of some sort of solidarity. As soon as the Russia relationship causes them more harm than it provides benefits, I think they'll throw the Russians to the side. We're not at that state yet. So, like I said, they're still trying to balance, but they're very calculating and very clear-eyed about what's in China's best interest. And right now, China's best interest is to stay neutral. In terms of the energy imports into China from Russia, and the reality is, you can only boost those imports from Russia so quickly, right? They go through these pipelines. Those pipelines are already pretty maxed out. In fact, China doesn't import enough energy from Russia to offset the potential reduction in energy imports into Europe. So China couldn't really step in and take up for any reduction in imports that Europe might do. So it's unclear exactly how much help that would provide Russia. Meanwhile, China's thinking, well, yeah, we import a lot from them, but now they're a pretty unreliable source of energy. And again, going back to them being clear about their goals, one of China's number one goals in all of this is to maintain energy security. So if Russia provides volatility on energy supplies, then they're not really incentivized to go boost those imports, especially if it's not really going to help Russia all that much anyway. So they've been very cautious on that front so far.
So it's a great segue into maybe a little flashback or a little historical context. Like, what does Xi think? I mean, talk to us about like this notion of stability. And I always think about it as like the everyday American says, well, it's all communist over there. And the truth is, it's very little communist over there. There's only 90 million Communist Party members trying to corral a 1.4 billion population base. Tell us why stability, as you so keenly pointed out in the daily briefs we get at Trivium, why is stability so important to the Communist Party as a context for how Americans should think about the authoritarian capitalist system that I think China has?
Yeah, well, there's a bunch of reasons why stability is so important. I think part of it comes from history. China's had a very volatile governance history. It's sort of kind of ebbed and flowed in terms of its geographic size. typically the end of one dynasty would be very, very chaotic, which would then be, followed by a period of warlords sort of vying for power. Finally, a new emperor comes in and provides some stability in terms of governance, economic and social governance, and they kind of last as long as they can, and then that dynasty starts to decline. So the history of the country, such a big country with so many people, such a long history, it has a market history of instability. And the communists coming to power after the last dynasty, and through the beating the Japanese in World War II, and all of that instability as well, the party has long staked its legitimacy on its ability to provide stability to the people, right? So that's sort of fundamental in terms of the articulation that the party has made for why they should be in charge. And it's very, people understand it because of the history. Additionally to that, as in any, one party state, there's no, outlet for the public to make their, their thoughts known on the governance. There's no elections, right? And so the party has to be very attuned to public opinion and public desires. People say, one party state, it's all about, clampdown and reduction of liberties. Actually, the party is very, responsive to people's needs, because they want to provide that stability, and they have to create and build and maintain legitimacy in a way that is obviously outside of an electoral system. So that's a big part of it. And I think the last thing in terms of your investors thinking about stability is that, in my view, the nature of the word stability and what Chinese leaders mean by stability is changing somewhat. Over the previous 3 or 4 decades, stability was all about high growth, like a booming property market, 8%, 10% GDP, a rising tide lifts all boats, progress on the economic front. But as the economy has matured and people are now, getting close at or close to the middle class, what they want in their life changes. They want cleaner air. They want, safe food and drinking water. And so the nature of what stability is changes. And so it's providing energy security, food security. And I would even argue that providing, reducing financial and capital market risks has become a big part of stability as well. So, right now people are looking at what A shares are likely to do in the run up to, the party Congress. And some are arguing, oh, well, the government's, saying stability is important, that it wants a strong stock market. But actually, if the stock market goes too much into a bull market, then that creates volatility and financial risk. So we're trying to tease out exactly how the stability mantra is going to map down directly into financial assets. But I think that's a kind of a debate that's ongoing at the moment.
Yeah, and Andrew, they just finished up, as you educate us on, they just finished their 2 sessions, which I don't really want to go too deep into that, but they do this government work report that basically talks about, hey, here's our priorities for the year. One of their priorities was 5.5% GDP growth. And to most, at least Western observers, that's always like a head scratch, like, well, how are they going to do that? Because we live in our world and we're in a contractionary environment, or at least at the precipice of rising rates, demand destruction, kind of this dance at our Federal Reserve. Where are they with their dance? Their central banks, where are they with their dance, both monetarily and fiscal, to get to 5.5%?
So they're in a different space than we are. In fact, they're sort of at the very beginning of more of a loosening cycle. They've been sort of ahead of the rest of the world kind of since the pandemic started, right? They were the first to recover from the pandemic. So, about 6 months after their recovery from the pandemic, that sort of late fall, early winter of 2020, the PBOC, their central bank and financial authorities fiscal authorities had already started to normalize policy. So it was a tightening cycle that basically began effectively a year and a half ago. So they've been normalizing, moving towards relatively tight policy, not like outright hikes, but slowing credit growth, pulling back a little bit on liquidity for a year and a half now. And so because of that, policy tightening, they're economy is now decelerating, right? Just like you'd expect after a policy tightening cycle. So they're about to hit what I would call the bottom of their growth cycle, partly through some loosening measures that they're taking. The big question for me is, they do have this 5.5% growth target, and the articulation that they've said around their loosening policies, a little bit more fiscal policy, slightly relaxed monetary policy. I don't quite see how they're going to get to the 5.5% yet, which may mean they have to bring in more stimulus in the coming months. So we'll see. And my concern, and I think a lot of people's concern, is if they get a little bit behind the policy curve, then they'll overdo it and overheat the economy late in the year. So, when you think about where we are now, we're at 4% growth. To get to 5.5% average for the year, we got to be above 7 by the end of the year.
Yeah.
That would be very, very punchy growth.
Yeah, interesting. And tie that 5.5, we've talked about stability as a key priority, quality growth versus just quantity growth. Tie it to the political pressures that President Xi faces. In our mind, in the Western observer's mind, the US observer's mind, he can just stroke a magic pen and things happen. And I guess Putin and his actions feed into that, what I think is a misconception of the pressures Xi faces. So tie in the difference between what Putin gets away with in his form of authoritarianism with the constraints on Xi, and particularly the discussion between this kleptocracy, these oligarchs, this oligarch class that's been around for 20, 30 years in Russia. And it seems like Xi just doesn't really want that oligarch class running around in China per se. Oh, there's a lot there, but help us think about the difference in the difference in the constraints on Xi, and why does he have to perform, particularly in his nomination year, election, whatever you call it, coming up this year in the fall.
Yeah, they call it the selection year. So it's
selection. Okay, good.
Yeah, it sounds like election, just slightly different. so, I mean, he's facing a ton of challenges, right? Just basically managing a country with a fifth of the world's population that's the same size as landmass wise as the United States is a massive governance challenge. Trying to invigorate a huge bureaucracy that oversees that governance in the Chinese government and the Communist Party, massive challenge. Then you look at economically, again, they set this 5.5% growth target. They actually set that in December. They announced it in March, but they set it at the party economic meeting in December. Well, since that time, what's happened? Russian invasion of Ukraine, potential, with that, this talk of potential secondary sanctions on China because of their, perceived support of Russia. And the worst COVID outbreak that China has seen since, the early days of the pandemic. The issues around US listings of Chinese companies and potential delisting, the tech crackdown. I mean, you just go on and on and on the list of challenges. And I think that's why people, when they came out with the 5.5%, were saying, wow, this already looked very punchy before you talk about a war in Europe and or a COVID outbreak. So I think the reason that he wanted to give the 5.5% growth target, as we understand it, is last year they set a 6% growth target in a year they knew they were going to grow well over 6. And so they were on the upswing last year. They set a very conservative growth target and said, we're going to focus on longer term issues. This year, very important political year, they wanted to set a stretch target, if you will, for local officials. Say, we know things are looking down and we know we've got a lot of challenges, but we still expect some level of growth, because while stability means a lot of different things, some level of underlying economic performance still matters. And so that's part of the stability piece that Xi Jinping is pushing for. But I think to your broader point, Xi Jinping is not Vladimir Putin in terms of he doesn't have the same iron grip on power that Putin does. He's the most powerful leader since Mao Zedong, but that doesn't mean he's all powerful. It doesn't even mean he's even as powerful as Mao. I think that's a debate. So he's the most powerful leader since Mao, but there's still a lot of factions, a lot of interests in China that are, have different agendas, want to, govern the country in various ways. I think Xi Jinping has largely stamped out any credible sort of high level alternative power centers, but it doesn't mean that everyone wants to do exactly what he wants. And that means that, he's engaged in ongoing negotiations and horse trading to get his people in the right place, to make sure his policy agenda goes forward. So, the Chinese system, as we often say, is not, a monolith. There's a lot of different actors, and Xi Jinping, while very powerful, first among equals, if not more, still has to navigate some of these other dynamics among other people with political influence in China.
That's good to know. So last year in May, I did a similar interview with Jude Blanchett, who's a friend of yours and Freeman Chair of CSIS. And I dared say last year, I said, "Hey Jude, let's talk about a nod to capitalism." He says, "Well, let's eliminate the word capital." So I'm going to reshape the question to you. Last week, the A-share market, Hong Kong, and the HK tech market, I mean, they collapsed. I mean, I don't know if it was probably last week. Well, yes, it was probably last week. And those markets were down 6, 8, 10, some were down 20% in a little bit of a very brief period. And then Xi and Party, and I don't know all the players, the great work at Trivium described all the players, came out immediately and said, we're going to do, kind of 4 or 5 things quickly to support markets. There was hey, we're going to wrap up our tech regulation here in the near future. We're going to continue to negotiate to make sure potentially we can keep Chinese listed companies on the US exchange through allowing better access to books and records. We're going to stimulate the property market a little bit more. I mean, a large part of their GDP formula is planned investment, and that includes lots of housing. Take us through, is that a nod to capital? I don't want to say capitalism. Is that a recognition that capital markets matter in China in their stability notion?
So it absolutely is. And I think, one of the things I think we often get in these dichotomies, and I've talked to Jude a lot about these issues, and I know his thinking on this is very, very nuanced and robust. And I would say, what we have to get used to is the fact that, China is both a statist economy and a capitalist economy kind of at the same time. When Xi Jinping and other party leaders talk about markets, they don't talk about efficient markets, they actually talk about effective markets. So to me, when I hear effective markets, what that basically says is markets, if they're, so put it this way, when we talk about efficient markets, we'll let markets decide where the resources go. If you talk about effective markets, it means that the goals have already been decided by someone else, and the markets are being effective if they are supporting those goals. So the markets can be used as tools to achieve various governance and state ends. And so that doesn't mean markets don't have a place. It just means that they're used differently or they're looked upon differently, and market failures are looked upon differently as well. And so I think Xi Jinping and his right-hand man on the economy is a guy named Liu He, the vice premier in charge of the economy, very much see capital market deepening as a hugely important way to finance their growth going forward, whether that be the tech sector, other innovation, traditional infrastructure and housing. So they know that capital markets are not deep enough, and so they want to manage those. They want to build them up. They're moving to a system, an approval-based IPO system that's been long overdue. Previously, it was a registration-based. They're moving to registration-based. Previously, it was approval-based. So they, previously every single IPO had to be approved. Now, if you register and you hit certain markets, you go forward. That's being rolled out. So those are some of the fundamental reforms that are happening. In the short term, I do think, I would characterize last week's meeting that said, hey, we want to do some of these things as an attempt at verbal intervention in the markets. There was a lot of uncertainty. All those things I mentioned around increasing concerns just started to get markets worried, understandably. And Liu He and team wanted to come out and say, listen, we're going to do some things to address these challenges. The question is, how much follow through will there be? So one way we know that they wanted to intervene in the markets was they released the statement that meeting had happened at 1 p.m. local time China. Normally those statements come in at about 5 or 6 p.m. after the markets have closed. So they typically, are very purposeful about not trying to intervene or in the markets. This time it was very clear. Hey, everybody, it's lunchtime. The markets are about to open back up. Just so you know, we had this big meeting. And so I think the market was happy to say, okay, they're on it. They're looking at these issues. They're going to address them. But this is where it will be really important, is if they don't have follow through on all of those issues, then I think the market's going to punish them for it. And so we have to see what the follow-up is going forward. And that's also kind of to your point about stability. I worry, a lot of the analyst report have gone from very, very bearish on China A shares, almost uninvestable calls, to now heavily overweight China. And I worry that it might be too much of a whiplash, because I also feel that while senior officials want to support the market, they don't want to overdo it. So we're trying to think through, what really is the upside for the A share market in this important political year when stability is paramount. Because if we get too much of a bull market, I think officials are going to try to tamp things down, frankly. So we're trying to work through exactly what that trajectory looks like, because this is all very new information that's come out over the past few days.
Yeah, it's been fascinating to watch. And of course, as we're investors with reasonable amounts of capital in the domestic market, the China market, we did see that reaction and that reactionary bounce, and it looks like it's created stability. Andrew, it's always been a question of mine as an investor, because that top down, we set the priorities as a central body, as a government, and then industry fills in to provide capital and innovation to fill in those priorities. Whereas here it's bottom up. Industry and capital flows to its best, highest uses, and then governance steps in when it gets a little out of hand or too big or too bold. So in China, things like green energy, as you said, that's a real important. Energy independence to them isn't more about buying more oil from foreign sources, but maybe it's more green energy, clean air, clean water, clean food. Is that, in your opinion, a way from macro top down to think about investing? Can you look at some of these themes and then backfill with specific companies? For example, we've owned Contemporary Amprex cattle for 5 years. That's up 700%. We bought Longai Green Energy, the world's largest solar panel maker. BYD is in that mix. GEM, which is a recycled battery company. I mean, can you make decisions that way based on their efficiency of setting priority and industry kind of backfilling with capital and innovation?
Absolutely. I mean, I think that's actually the way to do it in China, frankly. I mean, as we often say, government policy is decisive in market outcomes in China. And, it's not just that, Chinese officials want to be market leaders in green energy so that, they reduce their carbon footprint and can move to net zero emissions and all those things. They see this as an industrial policy as well. They are saying, we not only want to create this for a better environment for our people, but we view this as the technologies of the future. And we want to dominate the technologies of the future. And right now, in some traditional technologies, they're way behind. You think about semiconductors, et cetera. But in those nascent technologies, they feel that they're at a place where they can compete because there's no clear market leader. So they dump a bunch of money into that. And, frankly, their track record's pretty good. Now, the obvious point is not everybody, just because there's a government policy doesn't mean every EV, electric vehicle, or battery maker is going to go to the moon, right? There's usually a period of kind of overinvestment and then consolidation. And find one or two that goes to the top. But I think you're right, in terms of starting with the policy, saying, okay, here's where the incentives are. And then you guys do the hard work of drilling down to, okay, within that framework, what are the names that we think have, the right structure, the right tech, the right, capabilities to capitalize on that.
Yeah, it's such a challenge, in America at least. Value investors, a lot of our deep fundamental investors are bottom up. They fundamentally evaluate the companies. But in China, you almost have to be top down. And another shout out to Trivium, we get excellent macro top down policy analysis every day. It almost surprises me how much policy is being set every day and being communicated. And that's the day-to-day kind of year-to-year strategic stuff. But there's some overarching multi-year plans, things like common prosperity and dual circulation. Those seem to be the big 5 or 10-year plans. Andrew, talk to us about these two themes, common prosperity and dual circulation, why they're so important, and more importantly, tie in their desire to make this shift to consumerism, or more GDP growth coming from the big C versus the big I, which is planned investment. They want more consumption. Talk us through some of those things.
Yeah, so common prosperity in particular is, it's a phrase that's been around a while, but it's really been pushed, I think, since early this year at a Politburo meeting, early last year at a Politburo meeting by Xi Jinping. And his fundamental thinking in this is, like we just talked about, for the past 40 years, the entire goal of the governance system was just to create as much sheer GDP growth as possible. Didn't matter how you did there, how you got there. The goal was 8 or 10%, whatever you need to do to get there, you did it. And that was often through infrastructure and property investment, right? So a bunch of people, were able to improve their lives, riding that tailwind. Now they've been growing so fast for so long. The economy is starting to change. The society is getting more, their expectations have been raised. And so Xi Jinping is basically saying, okay, we're now shifting in the fundamental governance requirements that we're trying to address. It used to just be, we were a poor country and we needed to get, rich by hook or crook. Now that we've accomplished a lot on that front, we need to ensure that growth is more equitable. And a lot of people look at that and say, this is, Xi Jinping returning to his, communist roots.
His farming roots.
Yeah, exactly. And there may be an element of that, but I mean, I think Xi Jinping's fundamental assessment is he looks around the world and he sees political unrest, societal unrest in a lot of places, and he fundamentally thinks it's driven by economic inequality. And so in his view, a stronger country, a stronger economy is a more equal economy. China's a very unequal economy, right? You've got some of the wealthiest people in the world, and in Shanghai and Beijing, and then you've got people living, subsistence farmers in a big chunk of the country. So it's incredibly unequal. I think he sees that as a challenge to governance, and so it's not necessarily truly communist of redistribution, taking from the rich to give to the poor. They talk about growing like an avocado, the fat part in the middle class. That's what they want to grow. And so it's going to be a challenge, but thinking through how they will do that and what kind of companies will benefit through that kind of shift is a very important investment theme in terms of the long term. It's one of those things, it's not going to be a 6-month project or even a 2-year project. It's a 5, 10, 15-year project, but it will reshape, I think, some of the basic fundamentals of China's economy. And to your point about the net incomes and counts, the whole goal is to have consumption drive more of growth. So we're looking for specific ways that might play out. One is, seems like the tech re-regulation is going to be ongoing, and part of that's to say, listen, you guys made a bunch of money, we let you grow very quickly, now you guys got to help us support small businesses and support consumers. So that's one aspect of it. Who are so tech may be big question mark as to, they've obviously been losers over the past year, question mark as to how they adjust their business models to go forward, maybe become winners again. But what other winners are out there as a part of this shift? And then I can talk about dual circulation, but that was a long answer. Let me stop there and see
Yeah.
if you want me to follow up on that, or you have another.
Let's just take a second and hover over this consumerism agenda. At Phillips and Company, we always think about it as, where in the world can we capture US styles, 1950 style consumption? And if you could buy the stocks in the 50s, what would you buy? You'd buy Procter and Gamble, you'd buy Johnson and Johnson, you'd buy automakers, you'd buy these incredibly powerful consumer brands and hold them. And so, like, we think about China, although different, but similar in terms of investment opportunity. Now, the question I have is, I studied economics at Pepperdine. It was basic, C plus I plus G plus net. It's all that GDP stuff was basic. But as C is such a big component here, consumption, it's almost like the political class in America is mindful of that component and really placates it. We just saw what happened in COVID. Lots of fiscal and monetary support. We saw what happened in the financial crisis. We saw post 9/11, literally on September 12th, President Bush comes out and says, I want you to live your normal life and go to Disney World and go shopping. And that's like, wait a second, he has a point. We need to keep consumption going. Does it ever get to a spot where the Communist Party, 10, 20 years from now, becomes beholden to consumption as a part of GDP, and maybe it becomes the consumer party, just like it is here? We don't get to see it that often, but in critical times, we see the consumer get propped up. Will that happen in China? And will the consumer become more powerful than the Communist Party?
That's a good question. I mean, it is hard to envision, to be honest. The way that the party's been so good at governance is to have its hands on the levers of, the commanding heights of the economy, as they call it. That's one reason they were able to get out of recover from the COVID shock so quickly, is, they just pushed SOEs to start, producing industrial products again, get back to work. And they're very good at managing that side of the economy, both the heavy industrial side of the economy and the investment side of the economy. What they're less good at is controlling consumption. I mean, I think in general, it's pretty clear that, all governments are less good at that. You can do stimulus checks, but you're not sure if people are going to put it into savings or spend it, or maybe they're going to spend it on, consumer goods and not services, which, causes supply chain challenges, which is where we are now. So it's, the party's good at pulling levers that they know they control well. They're less adept at those levers that are kind of have a longer transmission cycle. And so we'll see if they're successful at really doing this. Right now, one of the interesting things that we're seeing is from the government work report that you mentioned, one of the ways they're trying to support the economy this year is they've identified about 2 trillion renminbi in new spending that they're going to take from state-owned financial institutions and transfer to local governments, specifically to support local employment and consumption. And the idea is, one, that's kind of their version of let's do consumer support, but in a way we can kind of control it. But it's important that it's literally a transfer of wealth from the state to, society, when typically over the past 20, 30 years, the transfers have gone the other way. And so if they continue to do things like that over a 5-10 year time horizon, then yes, consumption will become more and more important. Layering in your question about dual circulation, however, that's dual circulation strategy is an idea to make consumption more robust, but only to a point. They want to really, I would say, replicate the German model of industry and export. They want a very high-tech competitive export machine. They don't want to be exporting, these low-end goods. They want to be at the top of the value chain, still have relatively robust exports. They want to, have domestic innovation, and they want consumption to be a part of it. But I think they look at, I know they look at the US economy and they think it's become too hollowed out, right? They think the US has done, itself a disservice by basically shipping a bunch of its manufacturing to China and saying, China's benefited. And now they say, we love global supply chains. We think it's good for stability. But they actually look at the US and think they made a strategic mistake because now the US is vulnerable on the manufacturing side. So I think they do want consumption to play a bigger part, but there's a clear limit for, I think, good economic reasons that they don't want to go too far. And it's likely kind of combined with the idea of what you just said, which is we don't want the consumer to be too powerful. So, let's make sure we kind of keep a different mix inside our own economy.
Yeah, great thoughts. Andrew, you touched on this concept of industrial policy, and I'm always getting a slight chuckle at our kind of tantrums about China's industrial policy. And I always like, notwithstanding defense industry at 700 billion a year, and US healthcare industry, which is massively supported by the government. Oh, and the farming too. Put all those aside, we don't have an industrial policy. We complain about China's industrial policy. Right now, there's the Innovation and Competition Act. I think it's going to be like 100 billion, or I don't actually know the numbers, but it's massive dollars that are sitting in Congress waiting to pass to support the tech industry, and particularly semiconductors. That is a form of industrial policy. And tell us, does that reshape the hammer we have on complaining about China's industrial policy? Will we lose that cudgel we've been beating them on, because now we're trying to put our own industrial policy in? And what are the ramifications to China and the US by us building our own industrial policy?
Yeah, well, so I think we'll see, how successful the push is, whether it goes through. I think already, there's the competition here. And I think, as you say, one of the big ironies of our response to China's kind of rise is that basically our policy sort of looks more and more like theirs. We can debate whether or not that's appropriate or not, but it's an irony that I see and just wish more people would kind of acknowledge. Maybe it's good, maybe it's bad, I don't know. Right. But point is, it's happening, right? I think, if I can just be honest with you, I don't think we lose the cudgel, because I think whether it's a Chinese politician or a politician here in DC where I am, the comfortability with kind of hypocrisy is very high. So we'll still, nail them for industrial policy even while we're doing it. And they'll try to nail us for industrial policy even while they're doing it. So rhetorically, or even as a trade weapon, I'm not sure a lot changes from these policies. What I think we are going to see is a reshaping, some of the economic decoupling that people have been talking about over time. It's not going to be very short time frame, but it will slowly happen. There's a lot of political actors that think that's appropriate, that, we should reduce some vulnerabilities in our own supply chains and create some redundancies. And, I'll let the political folks decide that, but I think it is gonna lead to a little bit more disjointed global economy. And it really, it is a challenge for China on that front. If we, as Americans, get that piece right and do, compete more against China and create more of those goods at home, then China is going to have to it means we can export less of our, basic technology to China for production there, which means they're going to have to invest in their own homegrown basic tech. And who knows if they can do it? I think my gut instinct is to not bet against the China machine on that front. They tend to kind of figure it out. But it may be 5 years, it may be 10 years. It's going to be a big challenge. We don't know if they'll be successful, but ultimately we are likely to end up in a world that's much less globalized.
Yeah, it's interesting that during the Trump administration, in my early days, well, I've been following China for a long time, have visited there many times. But during the Trump administration, where the administration was at home, America
Mhm.
first, it seemed like every week President Xi was somewhere cutting deals with from the smallest country, in Sri Lanka
Yeah.
to Africa. Take us through like that global influence. Clearly, China dominates Africa. We've lost that initiative there. RCEP is this regional comprehensive economic program that I think, and Andrew, you know better, but is like 25% of global population and 30% of global GDP.
Mhm.
What are these markets about, and how powerful are those associations? And then maybe talk about the EU deal that's been pending, that was so close to being signed, and then
Mhm.
kind of got unwound. Just take us through that, and then we'll do one more question.
Sure. Well, yeah. So, as China becomes, richer, more sophisticated as an economy, more powerful, they're certainly looking to deepen their relationship with a big chunk of the global economy. And again, go to the dual circulation strategy. A lot of people think that strategy and other aspects of Chinese foreign policy is all about hunkering down, autarky, getting away from the rest of the world. My view is that dual circulation is all about taking stock of where China has linkages with the global economy, with the external circulation, as they call it, identifying where those linkages create vulnerabilities, like in the tech space, and trying to reduce those vulnerabilities. But meanwhile, they also want to take stock of where they have linkages with the global economy, and those linkages create benefits for China, and they want to double down on those benefits. So it's not just pulling back; it's hedged integration, as Jude Blanchett calls it. And one of the big strategies that they're using to do that is the Belt and Road Initiative, of course, investment in countries all along the old Silk Road, and on the sea lanes as well, through to Europe and Africa as well, as you know. I think generally the Chinese, again, are pretty clear-eyed about the fact that we're moving to a multipolar world where they want as many countries in their orbit as possible. And so they don't mind picking off, these small countries one by one and saying, hey, we want you with us. They think that adds up, right? And so, they're pretty clear that where the economic relationship with the US is going. Well, if that's no longer a market where Chinese companies are really going to likely have opportunity to play, let's piece together a bunch of smaller markets. Let's do it early on. And then once we get into this multipolar world, a lot of these countries will be economically dependent on us. We'll be setting the standards for their technology. We will have laid the cable for their, fiber optics, all of those things. And so it is, again, it's like, it's economically smart. There's a geopolitical and strategic element to it as well, but that's why they're pursuing these things. And you can do a laundry list. The Belt and Road Initiative is one, as you say. The Regional Comprehensive Economic Partnership is another. That's the biggest free trading bloc, in the world, and they're going to continue to push those initiatives. A lot of people in the States will say, well, it's ironic that China is such a champion of free trade when it arguably cheats on various aspects of free trade through non-tariff means. But the Chinese, they do want to continue deepening their relationship with the rest of the world. They do want to support free trade, even if it's sort of free trade with Chinese characteristics.
Yeah. Well, Jude, let's wrap up with this question. It was I put it to Jude last year, and you can find that, to our listeners, on our website, phillipsandco.com, under videos. Can the US and China coexist as true equal competitors, or is it just not in the US DNA to give up that coexist? I'm not saying we have to be inferior, because I don't think that's
Right.
ever going to be the case, but can we in our DNA coexist with a equal superpower? And what would the compromises that we would have to make to do that?
That's a really good question. I mean, I hope, I'm knocking on wood, I hope we can, meaning the alternative seems pretty dangerous, especially given what we're seeing in Ukraine at the moment. I think I'm optimistic because basically the way I view kind of US policy towards China at the moment is that the Trump administration kind of woke us up as a country to the reality of China as a competitor. You know, part of that was the pandemic and kind of China being more on people's radar. But, you know, obviously a lot of it was the former president himself talking about China a lot, the trade war, all those things. And it's just, it basically, again, in DC, the foreign policy and general policy establishment seems to just be waking up to the fact that, you know, China is what it is, and we're going to have to really start thinking about it. So because it's caught a lot of people, frankly, I think by surprise, there's an overreaction at the moment of everything has to be as hawkish as possible. Everyone has to out hawk everyone else, you know, and we just, you know, we have to bash China at every turn. I think over time, as we become more comfortable with the notion that China is going to be a competitor and they're here for the long haul, policy will become more nuanced, more you know, better calibrated. And I think you're already starting to see that, right? The big under the Trump administration, basically the mantra was, let's slow China down. How do we slow China down? Under the Biden administration, there's kind of a two paths. We want to slow China down, but to your point about the investment in our own chips and competitiveness, we also want to invest in ourselves. Right. So I think rethinking about it and seeing, yes, we got this big competitor, but saying, if we want to compete against China, continue to compete against China, then we need to make sure that we're up for it, that we have the innovative, you know, capacity and environment to continue to have the world's leading companies. And we're just going to have to think through that more deeply and just get used to the fact that we're going to have to compete against China. I think we can get there. It's just going to take time. You know, the Chinese are also, you know, they wish we weren't already thinking about it. They were hoping they could kind of sneak up on us. They're fine with, you know, they're fine with decoupling. They just wanted it to happen slower so that eventually they got to a point where they really could stand on their own 2 feet economically in terms of their ability to innovate and compete globally. They're not quite there yet. And so they're uncomfortable with it. We're uncomfortable with it. It's just, you know, these big geopolitical tectonic movements that we just have to understand is happening, you know, and I really hope we can get there. There's obviously a risk when, you know, a major power and a rising power. There's been a lot of, you know, I studied economics and international relations. There's a lot of literature on how that often goes badly. And so I think, you know, the more our company's basic view is the better we understand China, whether you're a company, a government, an investor, whomever, the better equipped you are to either invest with them or to make policy vis-a-vis them or to position your company either in China or against China. And so for us, it's all about getting a better understanding. And I think that process will play out in the coming years. So that's, I think, where we are.
Well, Andrew, you know, as a co-founder of Trivium, I got to tell you, we love the product. We love the various products we use. I think they're reasonably priced for our listeners and for our, you know, family offices and our ultra affluent high net worth investors. It may be worth you going on to trivium.com and get the free trial. You might find it valuable to help you think through what's going on. It certainly lowers anxiety, and this is an anxious time. Andrew, thank you for taking this time with us. We're really grateful, and we're grateful to all our listeners and viewers that spent some time with us.